Hello everyone and welcome to this SEF Backstage podcast. My name is Triska Hamid and I'm the editor of WAMDA. I'm joined here by Nader AlBastaki from Dubai Future District Fund, or DFDF for short. How are you, Nader? Welcome.
Great to be here. Thank you for having me.
So let's start off with your own journey that finally brought you to DFDF. Let's start off with who you are and what you were doing before.
So my name is Nader AlBastaki. By background, I've been a banker. I've been in the government sector doing various different things, from partnerships to heading data analytics teams to heading up strategy and looking at policy papers and putting them together. So I've done a range of different things that sort of paved the way to where I am today. So that the hats around partnerships, business development, were a big part of what I'm doing now, and I'll add in one other layer is my startup experience. I've been involved with a number of startups in my background, and the highs, the lows, the successes and the failures were a big part of what we're doing now. So the roles broken into a few parts. There's a value creation part where as a former founder, we're looking at ways where we can support today's founders with the things that we learned from our journeys and frameworks and toolkits that we've developed over time to help them navigate in a better, more organized manner that we did in going through our journeys. The other side of it is around ecosystem and partnerships. So it's looking at the needs of our portfolio, what they're solving for, what the problem statements they are addressing, and looking on the other side of the spectrum, working with the ecosystem, developing partnerships where we're value adding to them, but also understanding their needs. So not going up to them and being just another salesperson trying to cross-sell something I have a vested interest in, but by design understanding their needs and showing them what matters to them. So it becomes a sort of loop of, I trust you, I'm going to open up to what my needs are. And on the other side, we're developing this trusted advisor sort of role where we're helping them, guide them to the right places, how to sort of position themselves with these entities. The other hats that I play hit on strategy, marcoms, and it's a positioning play. Is how do we start telling the world and the ecosystem we're there to support, we're there to work with them and develop the ecosystem in every way, shape, or form, bringing our collective learnings together and sharing that with the wider ecosystem. And the final hat that I have, I know it's a mouthful, is looking at how we can expand our current sort of role as a fund. So are there certain initiatives we can take on board? Are there certain new ideas? And a great example of this is what we unveiled during COP was a whole carve-out of our fund that's directly focused on climate and climate tech specifically.
That was 20% of the fund, right?
Up to 22% of the fund, exactly.
And the fund is $1 billion dirhams, if I remember correctly?
So we have two anchor investors. Okay. We have the DIFC and the Dubai Future Fund. And collectively, they've helped us bring in the first anchor investments. What our fund size is $1 billion dirhams. And the idea here is that's the way we look at it is a starting point, because we're on a mission here to develop the ecosystem with the ecosystem, not doing it in silos from it. So the idea of having this whole arm that I'm overseeing to build up an ecosystem arm to it is an imperative part of the overall strategy, is making sure we're doing this with everyone collectively as opposed to in a silo trying to address our own needs in our own way. If that helps address sort of the why.
I mean, DFDF is quite unique in the sense that it invests directly in startups, but is also an investor in other funds, right?
Yes, and that's a strategic play that we took on board when we're developing the strategy of the fund to begin with. So when we looked at it, and this is sort of my hat prior to joining DFDF, I was part of the team that put together the strategy at the Dubai Future Foundation. And the idea there is, how do we play the government role into getting into the sector and not be everyone else? And what I mean by that is we're not just another venture capital fund. If we were, then we wouldn't require a government-backed entity doing that. The idea is that we come in and support the ecosystem and collaborate with them and plug in where there might be some holes in it. And what I mean by that is patient capital is one of the things that we felt was a missing factor in the ecosystem, because the fund model over here is a 10+1+1 model. That in itself has its own constraints when you don't have M&A activity in tech that happens from the region, capital markets that create a lot of liquidity for exit opportunities. So there are a lot of barriers to finding exits and exit opportunities when you have a closed-ended fund. So there's a tendency not to go for something that's addressing a global issue because you have those constraints on a local market and a liquidity issue. So that, by design, the evergreen structure was the first part of that strategy. The second part is the one that you brought up, is the direct, but the fund of funds component as well. And the fund of fund part is a key component of that, is how do we look and act in a way we're incentivized as a team to work with the ecosystem. And the only way we could do that is to make sure that we invested as capital providers into every incumbent and hopefully every emerging fund manager that comes out that has the right governance structures in play. That means that we're incentivized on the same side of the table as the entire ecosystem to work for the ecosystem. Once we start investing in what the ecosystem wouldn't ideally be going after or would require a government sort of support mechanism to come in on a cap table for. So the idea there is how do we work with as opposed to be another fund.
Okay. I want to take it back to the first hat that you wear, the value creation. How has being a founder helped you in this role that you play? And if you can talk a bit more about your past experience of launching startups and exiting.
So maybe I can break that down into two parts. I think one thing that we found over and over again, and a lot of people in the ecosystem tend to start with becoming a mentor at an incubator or an accelerator and ultimately at some point becoming an advisor to startups. What I've noticed, at least with the vast majority of people that have been doing these roles, is that they haven't been people that have gone out and built startups, but they're people that have built toolkits for people. So they have consulting backgrounds, they've been in businesses, but not on the other side of the table. And what we're trying to bring to the table is a different sort of perspective. Those solutions and those mentors are necessary because they come in with what the buyer side is looking for, what the ecosystem seeing. They bring in macroeconomic data points that give a lot of a flavor. But having gone through it yourself builds a different bond and different trust structure that comes in between yourself and the founders and yourself and the portfolio that you're hoping to build together collectively and grow together. So number one is when you come in with that story of your battle scars, it goes a long way of building that trust and opening up the doors and saying, help us with strategic support, operational support, and opening our doors to whether it's business development opportunities, where there are gaps in the market, for example, on a regulatory perspective, policymaking perspective. How do we, as a trusted supporter of the portfolio, but also trusted ear to the regulators and policymakers, make sort of these bottlenecks known? So there's that one side of it, it builds the trust factor. The other side of it is having seen it. I mean, people will say this over and over again, and in my perspective, I completely agree with it. Having failed, there's nothing you remember better than a failure, because you'll never do it again. Okay. I mean, that's the one thing that everyone takes away is I did that wrong, and I really don't want you to go through it because it took 3 months off of my journey. And I don't want you to go through that same issue that sets you back that period of time. Time is precious, go to market is precious. That is the most valuable thing that you have as a startup is time. Cutting that down to the shortest period to be able to scale as fast as possible, find the fit as fast as possible, be able to develop the product as fast as possible. I listed it the other way around, but the idea is that you want to minimize that to maximize sort of your probability of success. The second part of it is obviously resources are limited. So to have gone through that journey only to realize that you have a wall at the end of it, I mean, everyone's going to lose by the end of it. They would have learned the hard way, but at least giving that sort of guidance of asking the right questions, not being prescriptive, but being sort of the person that's saying, have you thought of this? Goes a long way of them thinking about other opportunities of not making the same mistake, but in a very structured way, as opposed to don't do it, I did it, because they also have to go through that process of learning as well. If that helps answer the question.
It does. But so when did you launch your first startup, and what sector was it in?
So my first startup was when I was at university. I started a cosmetics distribution company.
Okay.
And
what took you down that road?
I happened to be in a university town that had a massive success story of a dropout grow up right next to the campus. It was called Blackberry. And that little town went from only having university students and university professors as a target market for services in the city to a massive white-collar group of people that wanted everything and everything. Yeah. And anything would have made sense to open up at that point. So it was just my entrepreneurial spirit of saying, finger in the air, cosmetics is high premium, low access product in this town. Let's go after it.
Okay.
And that happened to be my first exit. Sold the business when I decided.
So it did well.
It did well.
Okay. That's amazing for first-time founders. That's not usually the case.
No, it's not usually the case. But I didn't ride the alpha route. I rode the beta route, and basically the market allowed for my success as opposed to my product allowed for its success. So I didn't learn the difference until much later in my life when I had my first failure soon after that. So I went into the entertainment business, but soon after that failed miserably. So basically moved back to the UAE in 2009 and realized that there was a massive Punjabi speaking population in the UAE and that there was a huge addressable market. With that macro hat on my shoulders and head, I thought, why don't I address this massive market with an entertainment product? Failed miserably for various reasons, but the failure was alpha, wasn't beta, and that's when I realized the difference. The product itself wasn't differentiated enough, and there were a lot out there. There was nothing that differentiated me from what was out there, and I learned the hard way. But that reflection helped me with my next one, which was in the health tech space, and that had both its pros and cons. I mean, it had its success stories. We grew to 4 countries. I grew the customer base on both sides of the marketplace. So we created help.
Can I ask what year this was?
This was 2011 when we started.
So very early on in the ecosystem, there are hardly any startups in this space.
Not many at all. So there was ourselves and another competitor that started in this space. And we're both doing extremely well until we faced regulatory issues. And that's where, for the first time, I decided I don't want to take this on board. After the story of supporting startups with grassroots problems, because the bottleneck was always, as a startup founder, out of my hands. It needed a few people that came together that consolidated problem statements, not this $20 million company that's trying to make their voice heard when there's $20, $30 billion companies sitting there and having the same chats. We're not listened to. But bringing people, and this brings me back to my hat today and why I'm on this mission, is by consolidating not just our startups through the direct investment channel with policymakers, with regulators, with their bottlenecks, and they're making their voices heard. Our portfolio extends well beyond that. The portfolio of our portfolio on the fund side is, in our eyes, our portfolio as well. So amalgamating all of these together creates a voice worth listening to when we go to a policymaker, when we go to a regulator. And that's part of the mission. Seeing the friction points I had in the past, although it was early days in the market, there was a lot that we learned in terms of navigating both on the policy side, how we could support the sector, but also the regulators being more open to working, listening, learning with us as we're innovating and understanding
and
the
I
sector.
think both the government and the regulators have become very receptive to startups and working with them.
Yes, and it took years from both the investor side, because that's over time become an institutional business, whereas I was in the early days and there were literally 3 names out there, to now it's an institutional big part of the economy where there are all-star names that the government will also listen to. But yeah, it's been a long journey, and building that up to where it is today is a blessing. We're in a much better place, but still there is there is room for it to continue to grow and continue to learn. Everything can get better over time, and as many will attest to at this conference today.
So we're on your third startup. How many more came after that?
There's a few more.
Okay.
So everything from auto spare parts trading to an angel investment platform to two travel tech companies and a recommendation AI system. It's been quite diverse. A few of them worked out, a few of them didn't. A few of them were time-bound opportunities that when the market was good, it was a great time to have them, but as they fizzled, it was a good time to be aware that the macros weren't in our favors and be ahead of the game in terms of closing down. But taking advantage of the positive time for that sort of a sector. So the example is auto spare parts, for example. There were times where there were arbitrage opportunities, for example, as an entrepreneur to take advantage of. But as those fizzled away, just to be cognizant of the fact that it wasn't worth going on and continuing in that path, for example.
What was it specifically about founding companies that appealed to you so much? I haven't met many 8-time founders for start. What do you think it's something innate in you?
I love the 0 to 1 journey as opposed to the growth journey. So what I mean by that is I love finding the market for a product, going through the painful start of not working, and finding that one thing that has a shining light to it. But beyond that is where I start fizzling out in terms of interest, because that's the challenging part. I love that challenge of building and finding some early sense of there is demand for this out there in the market and going after that. But once it gets to a point where you're building up a team, you've realized this is your target segment and you want to start growing the business, that's when it sounds like a mouthful when I say 8, but really it's not the entire journey of 8. It's been the let's get it off the ground journey of many of those, and in some cases there were time-bound journeys. In some cases they were on a good path, and that's when I stepped out, basically.
I think that's very interesting, because the fact that you realize where your strength and weakness lies, it doesn't seem like you're driven by ego to see something through to the very end. I think perhaps a lot of founders fail at that point of not realizing, actually, I'm probably not good at scaling. I'm good at launching something, but I need to hand something over. Was it difficult ever, just taking a step back, realizing that you'd hit your threshold, let's say?
I think there are 2 parts that come up to my mind. One is, what was my mission to get started on these journeys? And for me, it wasn't about a mission for those specific startups, although I was mission driven at that time because I bought into them and I loved the journey that they were going through and finding people that found this value added for them in their lives, whether it's opportunistic, efficient wise, etc. What I found was my driver was impact, and I always wanted to make a ministerial role at some point in my life. And having both a sort of a grassroots experience in multiple sectors was one thing that was a driver for me. Is having nodes and understanding of what works, what doesn't, where is the economy going at that layer of it, versus when I was a banker as well, seeing it at the macro level, seeing the capital flows and seeing it at that very high level, seeing that all trickle down, I think for me was an educational journey. And for me, the driver was understanding, learning, and moving on. So that was one part of it. The second part of it is the interest part, is what part of it did I love the most? And for me, it was that initial journey of figuring it all out, finding a solution that people were willing to pay for. I think that was, for me, success was right there. Anything beyond that was that excitement layer started going away, is that first person and that first paycheck that comes in, or that first credit card payment that takes place. That goes a long way. That excitement is hard to replace.
Yeah.
And doing that over and over again was more my driver at that time.
Did you go through the journey of raising investment from VCs in any of those startups?
No, with one of them I did.
Okay.
But the vast majority of them were either self-funded, or they went through friends and family rounds until they got to a point where we got market fit. And that was the point where, when the VCs were coming in, for me it was institutionalizing to a certain extent. So for me that was the point where the interest sort of fizzled away, kind of thing. Yeah.
So how has your journey as a founder impacted you as an investor? I mean, we spoke about the value creation side of things, but what is it like wearing the investor hat now?
The investor hat for me, so there are two sides of it. One is the part of, I've used two sides a few times, haven't I? But there are two sides to it. Number one is, where do I play in our business model? So there are two types of business models out there for venture capital. There's the pure play capital deployer business model, and then there's the business model of we capital allocate, but then we also work very hard alongside you to help you grow. And that's the part of the business we're building up, basically, with my joining. And what's interesting about that part is I'm looking at things in a different perspective. My view is, what does the ecosystem need? Where are the gaps of the ecosystem? And I want to support these partners, the ecosystem, in the best way possible. So that sort of helps us feed into our investment strategy in terms of, what does the ecosystem require? Where is it heading in the next 5, 10, 15 years? And beyond that, I mean, we have two spectrums that we generally look at. The 50-year mark, where's the world heading? And where's this market today? And where do we see ourselves in the next 10, 15 years? Because that's ultimately where we want to invest in as a fund. But ideally, within this ecosystem, we're here to support this wider ecosystem. So number one is, how do we take this ecosystem perspective and work backwards from it? Because ultimately, this goes hand in hand. If we bring in the solutions that the ecosystem wants, they open up a lot more, which gives a lot more value to our startups at the end of the day.
Yeah.
And that flywheel effect is an important part of what we're trying to achieve here for our direct investments, but also for our fund of funds and their investments. The other side of it is, there's also interesting opportunities that come up where a sector doesn't exist over here, but is a global problem. And that's a big part of what we're trying to achieve as an investor here is, where are we seeing the world heading with that 50-year mark as a sort of a North Star on where things are heading, and what needs to take place on a global scale for us to get to those global opportunities that are happening. And a great report around this is what the Dubai Future Foundation has published a couple of times over, is around the 50 opportunities that are taking place in the next 50 years. It's a great guidance point on where futurists think the world is heading. So we like to take that on board and have our own self-reflections on where is the current state of the market, where is it heading towards those 50 opportunities. So our thesis around that direct part of our business is really centered around understanding that and those flows to make those investments.
So what are those 50 opportunities? Can you name a few?
There are themes around them, right?
Okay.
So there's themes around, because that's a long list, right? The themes around social and how that structure over time is shifting.
Okay.
And how to take that and look at solutions that with those changing trends and mega trends. Make sure that the social aspect of our daily lives as people are supported with solutions with the way that the world's heading. The other side of it is nature, right? I mean, at the end of the day, resources are finite on our planet, and looking at ways where we can maximize output from whatever we're taking, minimizing that disruption, giving back, finding ways that cyclicality works. Materials and material sciences is a big part of that as well. So how do you start marrying the nature part with where we're heading in that part, in that sense? Looking at this part of the world, for example, where about, 70 years ago, the population was in the tens of thousands. We're now sitting in a country with over 10 million people. Yeah. Just that scale, the size of growth is one thing. How is it built, and can we do it in a better way where there's growth happening in new parts of the world, where it's not disrupting, and we haven't seen generations of changes to the environment that might cause, for example, a new ecosystems and building from scratch. Are there new ways, better ways, less disruptive ways of building that? Are there more or less disruptive places to build those in? And what goes into them as well? What are those materials, and what leaps have we been making right now versus where are we seeing things going, and maybe investing in those sort of spaces?
This is quite a unique way of looking at investment opportunities, because most VCs that you would speak to care more about the returns and wouldn't think more about society and the impact of their investments. Is this because, you know, one of your it's a government-backed fund? Is that why you guys have to look at?
Absolutely. We look at everything through a double bottom line lens. One is we need to be sustainable as a fund. So returns do matter, because we do want to make sure that this fund lasts and it continues to attract the right people to invest on its behalf. But then on the other side of the spectrum is that it gives back to the wider ecosystem, whether it's to the environment, to the society, economically as well. Yeah. Is it diversifying the economy? Is it contributing to the economy? Is it creating jobs? Is it attracting talent? Is it creating intellectual capital? All of that does come into what we call a double bottom line on our perspective.
So the investment landscape isn't looking too rosy. Last year investments fell in the region. This year we're anticipating the same. How does a fund like yours deal with that? Have you become more hesitant in writing checks?
So there are a couple of things I think that are worth mentioning here. The macro economy does play a factor. I mean, when interest rates are high, there's an opportunity cost to investments. So at the same time, we also have a duty as a government-backed entity to make sure that the ecosystem doesn't fall short of its support to the ecosystem. Now that said, these two have to at some point converge, where there's rational sort of investing, where it makes sense. And we've gone through a period of that rationalization has happened on both fronts. The startups themselves have boards, for example, have investors. We've asked them to be a little bit more prudent about their spending because there are opportunity costs for the investors, and they're being a little bit shy about investing, but then that also affects valuations, right? When interest rates go up, valuations go down. And rather than taking a hit on a valuation perspective, making sure that the funds or the startups are resilient to the macro economy and where it's heading, because this affects the consumers, right? Yeah. Consumers on both fronts, both enterprise and consumers. Consumers as individuals have a higher cost of finance, and the majority of that cost is mortgages, for example, and their ability to spend goes down, so they rationalize their spending. So whatever you're building needs to make sense for them to keep as they're consolidating their spending on one side. With enterprises, the same thing. They're going through the same interest coverage that they have to be cognizant of. Their procurement teams are being pressured to consolidate the number of entities that they work with, for example. So that wider macro environment means that they have to be very prudent about cost cutting, making sure that they're increasing their runway so they don't have to raise as much. Because there are two things that are affecting them really, is their ability to raise and at favorable valuations, but then their buyers and the demand side having a lower willingness to spend. And they have to keep that in mind in the current environment. And the ones that have done well, we're very bullish about this year being that year where, the macro trends are starting to shift. We've seen interest rates cap out. Now, when they start going down is, anyone's guess, but the fact that there is that optimism about this is the year where that correction starts happening, we've seen a floor on valuations, which is more positive for both the founders and them raising and not getting diluted as much. But then the investors coming to the table and saying, okay, the ones that have been prudent are now back in the market. So we're very optimistic, we're very bullish about what this year entails. The last couple of years have been driven by macro trends, unfortunately, and we're not, the world is very interconnected in that way. I mean, our region is not any different from any other, apart from the fact that this is a sector that's now being supported more than ever before, and that the support mechanisms from whether it's government, infrastructure, and enablement of talent acquisition has never been better before. There's still that macro headwind that we all have to be cognizant of.
We mentioned climate tech and the 20%, up to 20% allocation from the fund to that, but are there any other sectors that excite you?
At a very high level, yes. One that comes to mind is this space around health, longevity, and life sciences. What excites me is, with the last couple of years, the advancements that have happened in terms of bringing the cost down of analytics, AI, and specifically around infrastructure, we find a lot of interesting opportunities when it comes to genetic sort of research and finding solutions that are more regional for different minority groups that were not previously targeted as much globally for new solutions. So we feel like we can work a lot more closely with big pharma, for example, and different research outfits where we can find solutions that are more catered to, for example, our region and the various regions that are very interconnected to ours, where we have a lot of interconnection, whether it's a diaspora that lives here, whether it's trade connections, and creating opportunities where we can find solutions together that are better personalized and purpose focused for the target solutions and people on the other side. Apart from that, I feel in general we're sat in a part of the world that's emerging, developing, and there's a lot of infrastructure that needs to get built around that, and there's a lot of optimization of that could happen when you're building it up that didn't or doesn't require multiple layers of. First we built carriageways, then we built railroads, then we built highways, then we built metro systems. There are different ways of going about building this infrastructure and enabling it, whether it's financial infrastructure, whether it's various other ones, whether it's energy related, etc. And finding ways where we can come in and be a supporter of that growth in a way where it's optimized and going through multiple phases of growth and let's say blue ocean solution finding to get to a point where it's more efficient and scalable at the same time.
Okay. So you're optimistic about the future?
Very optimistic.
Okay. All right. You're one of the few. All right. Thank you very much for your time, Nader.
I appreciate it. Thank you.
All right.